What's good, YouTube? Back with another video. In today's video, we'll be doing a recap. It's November the 4th. So we have a trade recap for you today. And also just to provide a little bit of the behind the scenes thought process that goes into specific strategies. We've talked about it before. When it comes to my specific strategy, it is liquidity zone based, higher key time frames. We have major levels, and I'm looking for supply and demand. It could be support and resistance. It could be major key level trend lines. So right now we're on the hourly chart. I just want to talk to you a little bit about pretty much the methodology, the thought process behind the trade that I took today. And then also just to give a little kind of update on what I'm up to these days, the grind that I'm on. As the channel suggests, is the level up mindset. So with that being the case, I've been focused a lot on not only mastering the charts, mastering self, mental, physically, financially, definitely being sure to thrive in all aspects of life. And with that being said, over the past few months, I've definitely been doing that a lot. And even I could see the change within trading. If you don't know, I encourage you to go back and check some of the earlier videos that I posted on this channel. Initially started a trading journey with stocks. Late last year, I actually was introduced to futures trading, and I did definitely see that there was an avenue for it. With prop firms, you can pass a challenge and you're potentially able to gain access to a little bit more leverage, so to speak. So just for example, I may invest in a challenge, $100, $200, and potentially gain leverage anywhere in the range of $1,500 to $3,000. So again, started the journey with stocks. And over the last few months, that is definitely something that I've went back to from a mentality standpoint of just wanting to ensure that we're thinking long term. So that's investments overall. And you'll see a lot more of that. So I say that to say you will see a lot more of the combination. It won't just be futures, prop firm focused, because I will say, and I've always felt like this, I've spoken about it a little bit in previous videos, but as of recently, definitely over the last few months, I have a like-dislike relationship with prop firms. I've been very successful being able to pass challenges, get payouts, but even for myself, I'm looking to take things to another level, to the next level. And so with that being said, you can do it with prop firms, but you do have to have a specific mindset. You have to have a specific strategy, but that's what you'll see a lot more on the channel. It's overall investing. It's the level up mindset. That's again, every aspect of life. It is not just futures trading or stocks. It's mental, physically, financially, spiritually, the level up mindset. So that is what is to come. But today, let's get into it. We have a trade recap. We're starting on the hourly chart. And as you can see here, and I'm going to quickly just give you a rundown on thought process, methodology around this specific trade. Friday, October 24th, we gapped up. For individuals who know what gap up, gap down means, you know, that's perfectly fine. But just a quick kind of rundown on this. Essentially, when we have a gap up, gap down type of scenario, price overnight after hours, gapped up, gap down. You have so many different things that are traded after hours that affect price. There's even some brokers that actually have overnight trading, you know, so you'll see price fluctuate. And a lot of people only think about the 9:30 to 4 o'clock time frame, that New York session. And so with that being said, on Friday, that was our closing price, literally around this level here to the T, 6,829.50 on the SPY. If you're in stocks, that would be the SPY. This is futures, so S&P 500, ES, and then same thing with the stock market. If you're trading QQQ, it'll be NASDAQ. So you'll see a lot of references between these two, because one thing for myself personally, I'm liking the price action on ES. I used to trade Qs a lot when I was doing stocks and then NASDAQ, but I'm liking the price action a lot more. And I guess that just comes down to the fact that with the SPY, with ES, it's the top 500 companies in general versus, you know, when you're dealing with tech heavy QQQ or even NASDAQ is just a top tech company. So I feel like it's a little bit more structure when it comes to ES, when it comes to the SPY. So that is where my focus has been lately, as opposed to NASDAQ and the Q. So just keep that in mind. So if you hear me reference ES, the SPY, it's interchangeable. But we gapped up. This was Sunday. So again, just going back to after hours trading, we gapped up from that price of 6,829.75 to 6,866 range. Now, with gap fills, historically, you can see that we typically would fill the gap. What that means is essentially price is going to go and get those orders, the liquidity. We should go back to the level, and typically it's the wick. Now, sometimes because this wick to this wick is an entire zone, and I will mark that so it makes sense. But sometimes you will notice they just test the midline. The midline just means the middle of the zone. So a lot of people ended up getting trapped going into Monday open, which was October the 27th, because keep in mind, this was Sunday. We gapped up. That's that overnight, starting at 6 p.m. Asia session opens at 7. And then going into that following morning, there were likely a lot of individuals who initially started to short the market thinking we were going to come fill the gap. So keep this in mind. This was October 26th. We didn't get back to this level until October the 30th. Let's just mark it. We had a high here, here. So many individuals, I guarantee you, were just trying to daggone short the market every single time, because we had not only, the market has just been extremely bullish, irrational in an aspect to where if you really think about it from a perspective of everything that's going on in the world, the market is just going up like crazy, but we realistically didn't see the drop historically that you're supposed to see in September. And then again, the market just has been going up. So fast forward to October 30th. This is when we actually started to see a downtrend, but you can only see that looking back. But one thing to keep in mind, again, higher high, higher high, higher high, higher high. If you hear the terminology when it comes down to higher high, higher low, guys, it's just market structure. So this is a pretty much self-explanatory. I'm not going to put all our lows in here, but we had higher high, higher low, higher high, higher low, higher high, vice versa. Now, this is likely where people started to maybe actually say like, oh, we're having a change of trend. Because again, we went up. This did technically create a lower low. But what do we have here? It created a higher high. So this is just the hourly chart. So again, you have to kind of trade what you see, not necessarily what you feel, trade what you see. And you also have to pretty much have a strategy that is going to allow you to take profit. So again, this is just bigger time frame, but what do we see here? Once this high got put in, now we start to see, we created this lower low. This was a high. And then we had lower lows. So now a lower low, lower high, lower low scenario. And it just kept on, this is the trend. So this is just a little bit of my thought process. I initially peeped, hey, we did create this higher high and all-time highs. I feel like the next level for ES is going to be 7,000. But if you notice, again, we started trending down, and that's when we actually started to create a potential downtrend. Again, overall structure, because you can go to the daily, you can go to the 4 hour, you can go to the daily, the weekly, the monthly. We're still bullish, so this within a smaller time frame, even an hour, which is pretty decent, you can kind of see this gradual shift that we're potentially starting to trend down in an overall upward trend. So you got to trade that accordingly. So with that being said, I noticed this happened again. We have the 29th, and then all of a sudden going into the 30th, we started to create this this downward trend. And so I also noticed we started to create a trend line. So again, we had a touch. Pretty much do it like that. And you can adjust this however. Essentially, these would be rejection. But again, we see the trend. And so that we did touch here. And so again, what was key for me is that we had these two touches. That's interesting. At that point, again, until you can only look back, you wouldn't have really realized this, but it is something to consider. We started to create another trend. There's a lot of consolidation within this period here. And then this was yesterday. They acted like they wanted to break out of this trend to the upside just to be immediately rejected. And I personally, within stocks, wanted to flip. I think it would have been like anywhere from $150 to $240 because I saw this trend being created and I felt like this was a fake out. That flip on the SPY contract on a 0 DTE means the expiration is same day, would have been huge. Would have been able to capture the trade around this level and ride it all the way down here. But today we're talking about our trade that we took this morning. So keeping all this in mind, this was the mentality that I had that actually led to me thinking that we were going to potentially get this gap fill because we had already tested this level here. And so again, that was the 30th and then they fluctuated up. Like again, look at it, midpoint. This is what I was talking about here. And then we went up, and then they acted like they were going to break out of this trend to the upside just to fake everybody out, major liquidity sweep and just downward motion. We filled this gap. Again, think about it. October 24th, they didn't get back to this level until November 4th. That was midnight last night. You had Asia trading session. So look at it from that perspective. We ended up coming down and I felt like we were going to get a retest of this level. So this is the hourly zone. I'm on the 5-minute chart at this specific time, or earlier this morning, should I say. And what I was looking for, London, you often will hear me talk about, liquidity zones, London, 3 a.m. And then for me personally, I have London session ending at 9:30. So coming into this level here, we had 9:30. So again, we were looking for the 5-minute tap. We didn't get that, but on a minor break of structure, we did have this potential. Again, I'm just looking overall spectrum. Within this trend line, this hourly trend, this zone, this channel, we got this move here. If you started to see, we retested, like I said, those levels. And this was at 5 a.m. Potentially a reversal candle after tapping into, we had a 5-minute demand zone down here. This is what we were looking at, this entire zone here. This level got broke here just by wick. But again, just looking hourly zones from a channel perspective, we're within the trend. The reaction that we had here, a potential reversal candle, some pretty decent, momentum, had some bullish candles here, potentially could be a V-shaped recovery. And then we finally do get a minor break of structure here. And then look what price did. We actually tapped into this zone, the midline from this top perfectly. But again, I'm expecting price to come to the 5-minute. So I had to watch this and missed out. I went to the 15 and noticed at this point, it was too late. I noticed this supply zone. I was like, we could likely have a reaction here. Did not take the trade because, and that's what I've spoken to in this video, earlier in the video, you have to trade the time zone or the time frame that you're on. So I didn't take that trade because I was thinking I could potentially get faked out and they're gonna go for this 30-minute supply zone. It is what it is. I mean, that's the nature of trading. You have to live with it. It's your risk, your reward. So you take the trade. I didn't take that trade. This one would have played out, if I would have caught the 15-minute. this one would have played out had I taken this 15-minute supply zone. And then initially, like I told you about that 30-minute, my trade was still there. Essentially the same risk, anywhere from that 150 to 250 range and targeting around 762.50. This trade would have played out, but I noticed we started to get this type of price action. So a potential doji reversal candle here that reacted from this zone. And then what is this? We have a lot of indecisiveness, some wicks on both sides. But if you notice here, a bearish engulfing candle engulfed these previous 3 candles. A lot of selling pressure here. We did have some buying pressure here, but to me, I'm already seeing that this is potentially a bear flag forming. So I went to the gym, I changed up my game plan. Initially, I was gonna take this 30-minute supply trade up here, but I thought about it, likelihood of it immediately, just going back up to this liquidity level here, probably slim. So I noticed this, I said, hey, I'm changing my bias at this time. It's around 11 something, we're wanting to be done at this time. So I went ahead and placed the order, and I'll go ahead and pop that on the screen right now for this level. So you can pretty much see that in real time. But I was in the gym working out, and I placed this order. So you'll see this before the rest of this price action kicks in. So this zone here, we have expected move. Again, a bear flag. We won't go into too many details, but it's a potential pattern that could potentially lead to downward price action. And expected move, you have your flag. Expected move would be the pole here. So essentially that's what we were looking at. And the reason being is because everything just revolves around liquidity. So I didn't take this trade, we missed out. We have to move on. We're late in the day. I'm getting ready to go to the gym. So I ended up changing the game plan, and I felt like, hey, this will be the trade that I'm able to take. And if it's not gonna be the trade, then it's likely gonna be a no trade day, which you have to be fine with that. So that is something that I've been a lot more focused on lately. So that being said, we have this zone here. And as you can see, we tapped into it to the T, but the expected move is the flag down, and then we have that pole, and we wanted to tap into this demand zone, and it was just a quick move. Literally, we're trying to, it's essentially almost like a 2.5. We have a 1 to 2.5 risk to reward. We were risking around that 250 range, and then see here, targeting the same thing, the 762. Yep. So it stalled out a little bit, but eventually we started gaining some momentum. Again, I'm in the middle of a workout, so I was just trying to, insert this where possible here. But I felt like, okay, if immediately we were going to go there, then I wanted to at least capture that hit in the TP, but it wasn't immediate. So I continued on with my set. Again, my trade is set. That's where I'm gonna wrap the video up. If you haven't already, like the video. If you're not subscribed, consider doing so. A lot more to come. But yeah, man, this is a trade recap for today, November the 4th. As always, level up your trading, level up your mind, and more importantly, level up your life. Catch you in the next one.